joining us today. We have some great news for you this morning. For those of you joining us for the first time, my name is Jennifer Teeter, and these are our hosts, Alice Chang, Janina Coates, and Sneha Bose. We also have a special guest today, our FASB representative, Miss Brenda Saxton. So thank you for joining us.
Thank you for having me.
So how are you guys doing today?
Great. I'm very well, thank you.
Excellent, excellent. Well, there's just so much going on in the accounting world, which is definitely good for us because that gives us plenty to talk about.
Yes, actually, I heard Obama's 2016 proposal will take away tax breaks for college sports tickets.
I can hear it now. Thank you, Obama.
Speaking of presidents, did you know that a former IRS commissioner is going to run for president next year?
That's interesting.
I wonder if citizens would be willing to support a former IRS agent for president.
We'll see. I think the biggest issues that are going on right now are the changes in revenue recognition extraordinary items.
Exactly, and that's precisely what we're going to be talking to you guys about today is the change in extraordinary items. So in their first action this year, FASB has implemented a new change where they're going to be eliminating extraordinary items from reporting on the income statement. And this is all going to take effect at the beginning of 2016 for any new income statements.
Well, it's good. We definitely needed that change.
Told you so.
Sounds like you guys are pretty excited about this change. So do you guys have any experience with this in your careers?
General understanding, but not like real experience with it.
Yeah, that's totally understandable, Alice. It's really so rare that oftentimes an accountant can go their entire career and never have to deal with it.
There was actually a study conducted over 2005 to 2009, and over those couple of years, there were only 22 instances of an extraordinary item being reported.
So that means in the entire country, in millions of companies, that's an average of about 5 a year or something like that.
That really seems so insignificant. Perhaps maybe some of the reasons why they're looking to change it. So let's go ahead and get things started. So we want to basically go into reiterating what an extraordinary item is, its current treatment, and then we'll get into some of the reasoning behind FASB's looking to change it, and then what accountants can expect in the future with the new reporting. So what is an extraordinary item? I mean, an extraordinary item is basically a non-recurring material gain or loss that significantly impacts an organization's profitability. Now, you cannot just consider anything you want to as extraordinary. There's really just two key criteria that have to be considered, and that's where things get a little bit sticky. So the first key criteria is basically making sure that the event is unusual in nature. So this really means that it has to have a high degree of abnormality and be relatively certain that it's not related to the organization's everyday activities. The second key criteria is that the event be infrequent in occurrence. So you need to make sure that the event is not going to be likely to reoccur in the foreseeable future. So in addition to these key criteria, organizations really have to keep in mind the environment in which they conduct business, because what may be considered unusual or infrequent in one part of the world may not be the case in another.
And in addition to these criteria, the FASB issued an opinion in June of 1973. This is APB Opinion 30, and this severely limited what can be called an extraordinary item. So there were certain gains and losses that are actually pretty usual and can no longer be classified as extraordinary.
Well, and there's also a bunch of exceptions to the rule, which can make it pretty difficult for accountants in their daily life.
They're more like clarifications to the rule, and also the main problem is that companies can interpret unusual and infrequent very differently. So FASB wants to make sure that we don't, trick investors into ignoring something very small.
That makes sense.
And since determining whether something's extraordinary is confusing, let's take a look at a couple examples. So our first example is the Mount St. Helens eruption in 1980, and it destroyed 68,000 acres of forest land, which was owned by a paper company. So viewers feel free to chime in. Any idea on whether or not this was an extraordinary item?
Well, this item...
I'm gonna say no, because if you live in a volcanic region, it would not be unusual for volcanoes to come.
That's a good point. Actually, this was classified as an extraordinary item. They considered it to be unusual.
I've never seen any of those.
The volcano had not erupted for about 130 years, so it wasn't really in anyone's 20-year plan. Mount St. Helens going up in 1980. So this did get classified as an extraordinary item.
And again, part of the problem, a lot of people consider unusual and frequent differently and interpret it different ways. So our second example is the 2007 Writers Guild of America strike, which cost the LA TV industry millions of dollars. So should studios have reported the losses as an extraordinary loss?
Again, we'd like to hear from our audience.
I would say probably somebody was accounting for it.
So this, it
We
may
said it was
seem
tricky.
like it would be unusual or infrequent, and the FASB actually issued, this is again opinion 30, in 1973, and they clarified their stance. So strikes in general are actually usual and expected to occur. Anywhere where you have employees, there's a possibility that they might get mad at you and leave. So this is just a risk of doing business.
But what about the Chicago Tylenol murders?
I'm glad you asked that, Judy.
That's so scary.
Yeah. They still haven't caught the killer and brought him or her to justice yet. So basically what happened is that an unknown murderer laced Tylenol bottles with cyanide, and he basically went into stores and tampered with the bottles. And so this killed several people, and Johnson & Johnson decided to recall every single bottle of Tylenol on shelves, which cost them $100 million. Any ideas on if this was extraordinary or not?
Yes.
So, and she's right.
Yes, this was an extraordinary item. It is unusual and thankfully infrequent.
Last but not least,
Exactly. Our last example is the 9/11 attacks, which happened in 2001. It definitely seems as though it was not related to anybody's business activities, and also bombings are thankfully pretty infrequent here.
Which means that the damages from this attack would be considered extraordinary loss.
Not exactly. FASB actually stated in September that an extraordinary item classification would be ineffective to describe an event.
So the big thing about 9/11 attacks is that they were unusual and infrequent. A lot of companies thought this is surely an extraordinary item. But the idea is that the losses were just so staggering, so widespread over so many years following the disaster that you can't confine that to a single line item. How do you estimate the losses for example, the airline companies? How much did they lose? So this couldn't really be classified as an extraordinary item.
thank you, Brenna. So now let's get into how extraordinary events are currently treated. So Sneha, I know you've had a bit of experience with this, so would you mind sharing with the viewers how you reported extraordinary items in the past?
Sure. So as of right now, extraordinary items are reported separately on the income statement below income from continuing operations. They have to be reported net of tax, and then the earnings per share are usually reported as well. And most companies have found that the best way to do this is just to have a separate extraordinary items account. And this is useful because it shows that their investors like these one-time big losses or gains, and that way investors don't get overly excited about one big gain or overly concerned about one big loss.
So you're saying that reporting it on the income statement is pretty straightforward?
Yes. It's really the determination what or what isn't extraordinary that is the most complex, and this caused a lot of confusion in the accounting world. And as Alice mentioned earlier, catastrophes such like natural disasters or the 9/11 terrorist attack, they just created so much confusion in the accounting world. It really was time to think everything over.
Yeah, after 9/11, the board received a lot of feedback from stakeholders that the concept of extraordinary items was causing a lot of uncertainty, since it seems really unclear when an item is considered both unusual and infrequent. After all, the 9/11 attacks are not an extraordinary item. What else could it possibly be?
Yeah, I agree. The 9/11 event was definitely the key event that triggered FASB to overthink the current treatment of the extraordinary item. And although most users find the information about the infrequent and unusual transactions and events useful, they don't necessarily find the classification and presentation of the extraordinary item as useful.
Which makes sense because most items never meet those criteria.
Correct. It's actually extremely rare in the current practice that an item or transaction classifies as extraordinary. It can be presented in that way. So by eliminating the concept of the extraordinary item, it's going to be a huge relief for a lot of accountants. And it will save a lot of time. It will cut the costs tremendously and will reduce the complexity of accounting very much.
Wow, awesome. This is really good
Yes, I agree a lot. And it also aligns a lot more with the international accounting standards, which is also very necessary, in my opinion. Yes.
Most definitely. Anything that's going to save accountants time and firms money is definitely a good thing. So speaking of changes, let's go ahead and move on to that. We've got our expert here, Brenna Saxton from FASB, and she's going to give you an idea of what to expect rolling into the future.
So, under the new rulings, you can take an item that was formerly considered extraordinary or simply an infrequent or unusual item. They're all classified the same way now. They have a separate line item. This is in income from continuing operations. It no longer has to be net of tax, which is a huge relief because calculating that was a big pain for a lot of companies. Sometimes they'll be given descriptive names, for example, effects of hailstorms or effects of tsunami, whatever event happens. And you don't always have to give it that kind of name. You can just have a gain or loss account and then clarify in the notes of the financial statements what that event was and its effects.
Thank you, Brenna. We really appreciate you taking time out of your busy schedule and coming out and sharing your expertise with our audience.
Always glad to help.
Excellent. Well, that concludes our presentation today. That's all we have for you. So thank you for starting your morning with Good Morning Accountants. If you'd like more information on extraordinary items, we have posted that information on goodmorningaccountants.com. And make sure to tune in with us next week. We're going to be giving you some tips on revenue recognition and how to smoothly transition into that. So thanks again, and we'll see you next week.